Hello and welcome to this very special interview here on Money Paathshaala. Joining me today is Aditi Nayar, who is a veteran economist. She's been tracking India's economy for close to 2 decades. She is the chief economist and head of research and outreach at ICRA, someone who is deeply admired for her commentary on the economy. Thanks very much, Aditi. The economy has been in focus, is in focus. I'm looking forward to this conversation with you after quite a while, actually, and I do hope we speak more often because people would love to hear how you simplify, the economy for the common person. So my first question to you, how is the economy currently looking to you? Because the stock market commentators seem to believe that things are very, very good there on the economic front. But what is your own view and what kind of growth are you penciling in for FY24?
Thanks a lot, Vivek, for a very generous introduction. And, just to get into the first question that you asked, the stock market and economists like myself are not always on the same page. So, I might end up painting at the best of times, I'll probably paint a more cautious picture. And I think that's going to be the case today as well. So I am cautiously optimistic. I think India is well placed in the global scenario. We are looking at growth being close to the highest amongst the large economies for India in FY24 as well. However, we are looking at growth slowing down from last year to this year. And there are a few reasons for that. One is the base effect, which is going away. The second is we've had a lot of monetary tightening, and that is likely to have at least some impact as far as the growth momentum is concerned. And the third is that the global economy isn't really supportive of exports growth from India. And we've seen several months of merchandise exports contracting. We're also now seeing a steep slowdown in the pace of growth of services exports, although here we still remain cautiously optimistic that we're not going to get into a contraction mode, but certainly there's a lot of wait and watch that we need to really be quite cognizant of the fact that services exports cannot continue to grow in isolation of what's happening in the rest of the world. And of course, we have this big question on the monsoons, El Nino, and climate events in general. I mean, we've had this strange start to the monsoon season. We've had a delayed onset, we've had a slow progress, and then a very fast catch up because of excessive rainfall over short periods of time. So while if we look at the monsoon numbers today, they're going to look normal, it's actually masking or camouflaging a lot of unevenness which has happened in the past 6 to 7 weeks. And, that is really something that doesn't bode very well for agricultural outcomes anyways. And we have this vector of a potential El Nino hanging above our heads, which is definitely adding to more volatility. So agriculture, definitely huge amount of wait and watch. Manufacturing, from the point of view of commodity prices, definitely being a lot lower than the kind of peaks that we saw last year. We're hopeful that that's going to make margins better and help to boost volumes as well when prices are not going up very regularly from the manufacturing space. Services, I should stay, my view on services is that a lot of households will continue to prioritize services consumption, which is something that was not possible during the lockdown. But in many cases, the pent-up demand component is now off the table. So it's still a prioritization. I'd rather have an experience than buy something, but that doesn't mean that there's a huge amount of pent-up demand which continues. So very mixed outlook for the Indian economy. But overall, I would still categorize myself as cautiously optimistic, maybe not as optimistic as the FIIs that have pumped in a huge amount of money in the last 4 months, or the stock markets in general, but definitely I would call myself cautiously optimistic.
So I was reading this report that you put out in May, where you talked of a 6% FY24 economic growth. Are you sticking to that or have you changed your view?
So we have still got a 6% GDP growth forecast for FY24. And around that, we have a 50 basis points range on both sides. Downside from the agri-related risk that I was just talking about, and an upside of 50 basis points if government capex kicks off early from both the center and the states, and is effectively, now it's a little late to say early, right? We're already in Q2, but if it's less back-ended than last year, then that definitely is something that could actually bring in that virtuous cycle that we see in the investment activity. So we are looking at a range, I would say, of 5.5 to 6.5%, but the baseline expectation is still that it's going to be 6%.
You talked, Aditi, about El Nino and the monsoon effect, on inflation. What is your view? The RBI governor and senior officials have been, continuously saying that the worst is not over. Somewhere there is this enthusiasm that because we've had two pauses, perhaps the worst is over, and from here it could either be a rate cut or a continuing pause. People have almost forgotten the fact that there is a possibility of a rate hike as well. What is the impact of the El Nino, the monsoon, and the whole impact that will have on agriculture, etc., on inflation going forward, according to you?
The CPI, certainly we're expecting a bad print for July. We're probably going to end up with a print around 5.5%. So a sudden spike, and a large part of that is because of the pain that we're seeing in vegetable prices, and also some concerns on cereals and pulses. Now, after that, I would expect that the intervention and the measures that are being taken by the government should help to cool off the CPI print over the next few months. May still remain above 5% for the rest of this calendar year, and I would expect prints below 5% in Q4 of FY24. Average, we're looking at around 5.3%, so well below last year, but well above that 4% target that the RBI and the MPC are going on and on reminding us not to take our eyes off. So CPI inflation, it's not going to probably be alarming for the most part, but it is something that we cannot say, the battle is over or the battle has been won. And if we have a lot of disruption coming in from the El Nino from next month onwards, then there could be an upside to what I've said as well. Now, on the rate side, I have a slightly different view. First of all, in my view, the pivot to rate cuts is very far away. Because if we, looking at the amount of emphasis on the 4% inflation target, which we're certainly going to be pretty far away from, I don't expect there to be any rate cuts in this fiscal year. So the earliest that I would expect a rate cut would be June of 2024. So that's on the rate cut. On the rate hike, my view is that a transient spike in vegetable prices may not be enough for a rate hike to be brought in after two pauses. I suspect that the MPC will retain a very hawkish commentary and keep indicating that they're ready to move on another rate hike if it's warranted. But I believe a rate hike would be warranted if we start seeing a generalization of inflationary pressure. So if we start seeing that the vegetable price spike or other food price increases start generalizing into things like housing, wages, etc., then yes, that might create enough necessary conditions for a rate hike to come in. But if it's just a transient food price spike, I don't think that that's going to be able to create enough justification for a rate hike. So yes, I do think that we're in for an extended pause.
Aditi, you also wrote recently about GST collections, and while they have been extremely robust and increasing, but you did flag off the fact that, if we were to meet the budget estimates, we would need almost 9 months, if I'm not mistaken. You wrote of 1.6 lakh crore per month. I think our last conversation was when actually GST happened. How do you see the progress on the GST collections bit, and how has it moved according to you? I remember many, many years ago, every economist, every corporate would say that bring in GST and you will see at least a 1% increase, 1% percentage point increase in the GDP. Can you tell us a little about how GST is evolving according to you?
GST, I must say, has had quite a history, quite a checkered history ever since it came in. And certainly, after the initial teething troubles, getting into a pandemic-like situation was not helpful. Now that we've come out of the pandemic, we are seeing pretty good GST numbers for the most part. And it's a combination of a recovery in the volumes and momentum, a lot of improvement in compliance, and also some benefit from the high inflation that we got last year. Overall, I would say GST is now in a pretty good place. After the 2 years where GST compensation had to be provided through the compensation loans and all of that, all of that is behind us. And there was a lot of stress last year when the GST compensation period was ending. How would the states be able to deal with that? But I think most of them have been able to deal with the end of the compensation period quite well. And 1 year after that ended, we don't really hear much commentary coming from the states who, for them, the once that compensation period ended, there's just some arrears that they were left to get. But they seem to have navigated that quite well for the most part. There are a couple of states who had very specific structural reasons why GST compensation was so critical for them. So let's leave that apart. But macro-wise, I would say that, the fact that GST compensation is no longer repeated often from the state side, I think we're in a very good place as far as GST overall is concerned. Now, specifically, looking at an average of 1.6 trillion per month is a little, let me just put it this way, the quarter beginning months, which is April and July and October and January, typically tend to see a spike in the GST collections because, they reflect the previous month's transactions. So there is a lot of seasonality as far as our GST collections are concerned month-wise. So while the average might look high, that's because it's building in quarter beginning months where we anyways end up seeing a spike. So overall, I would say that we're going to end up pretty close to the budget estimates. So it's not a source of stress as far as Government of India's own fiscal deficit is concerned.
What about the PLI scheme? You've written about that as well. Make in India has been a big thrust, and this whole PLI scheme has been one of the big measures taken by the government during the pandemic, in fact. Do you think that has succeeded? What is, according to you, the outlook in terms of Make in India? We hear of China Plus One, we hear of, new avenues opening up, etc., etc. So what is your view on the PLI scheme?
On the PLI scheme, it's quite interesting. What we've got so far is that the first tranche has been disbursed last quarter. And while on out of a total of 14 sectors, 8 sectors have received the disbursements under the PLI. But sectors with more than 60% of the total outlay are still at an initial stage of production. And out of the total capex that was expected to be incurred by corporates under the PLI scheme, only a small amount has actually been invested as of March of 2023. So really, the sectors with the largest amount of the capex deployment are actually going to start seeing that happening only from this year onwards. So I would say that between FY24 and FY26 is where we're really going to see the big benefit of the manufacturing starting under the PLI scheme and the attendant benefits that holds for GDP growth. So I'm quite hopeful that over the next 2 years, this is going to add to the other engines of growth that we have, the domestic engines of growth primarily, and really help to set the stage for us to grow at least close to our potential growth, despite the fact that we do have a bleak outlook as far as the external sector is concerned, both from merchandise exports and services exports, as I was saying earlier. So overall, I'm still quite bullish is not a word usually used to describe me, but I'm quite optimistic on domestic consumption. What I can see around us, young India is very aspirational, and if young Indians have a steady income, they're going to spend it. So I do think that domestic consumption is going to be a big driver of growth as long as we can take care of jobs and have a stability in the income outlook for a large number of households. I think we're going to be able to see good consumption numbers. Now, within that, the unevenness I was talking about might continue. So people would have phases where, one type of consumption is prioritized versus another. And as I was saying earlier, we still think that services will get a lion's share of wallets in the current period. And maybe I'm showing a little bit of an urban India bias over here, but I certainly do expect urban Indians to have a pretty reasonable consumption growth this year. Rural India, yes, I mean, we've already talked about all of the concerns that we have on rural India. So we might still see some amount of caution coming in over there. But, India's consumption habits are changing as we've got more and more of penetration of telecom and shopping online, etc. I think we may end up actually seeing consumption trends changing over there also. 5 or 10 years back, if you would have told me, oh, the harvest will be very good, the first thing I might have done would have been to change my gold import estimate for the year. Now, moving forward, that may not be the case anymore. So we may not have that automatic expectation that, oh, if rural India has done well, or if the harvest has been very good, that necessarily that a lot of that is going to get channelized into gold. I think other consumption is going to start to see a pickup with the kind of demographic changes or with the kind of changes in the internet economy that we've seen over the last few years. So perhaps very different consumption trends may emerge going ahead. And if Make in India and the PLIs can ensure that we're producing that stuff domestically, then that's a win-win from the current account deficit point of view as well.
Aditi, one final question. How are you reading the developments globally? I mean, you look at the Western countries, they're still facing economic challenges. We now read about China facing certain economic challenges, likely to impact India, according to you? I mean, you've already talked about how exports have been hit, especially goods. We are already seeing stress in the IT sector already. What is your view on the impact that it could have on India?
Global economy has sort of been very stop and start in the last year or two. We have good news, which is very quickly followed by bad news. One geography seems to be revving up, another geography seems to be experiencing stress. So the overall impact of that, I think, something which is going to be very meaningful for India is that with this kind of a stop and start, commodity prices are likely to remain very range bound. And for an importer like us and for a price taker like us, that is actually something that is going to be quite meaningful in terms of being able to keep input prices a lot steadier going ahead. Geopolitics, obviously, something like the Russia-Ukraine war, the impact that that had, or prior to that, the supply chain disruptions, those kind of events could still happen. But I don't expect so many parts of the global economy to sort of start firing at all cylinders together to create any kind of a commodity super cycle in the next 4 to 5 years at least. So if we are in for a period of relatively steady commodity prices, then that is something that for a country like India, for an import-dependent country like India, could be really, really helpful in creating more stable macro outlook and helping corporates to plan better. So that, I think, is the upshot. The concerns on the export side we've already discussed in detail.
Pleasure talking to you, Aditi. I do look forward to many more such conversations. Thanks as always for simplifying things. And I do hope that through a series of conversations, we can make young Indians understand the economy and its various aspects in a better way. Thank you so much.
Thank you, Vivek. Pleasure talking to you.